Hello from the Sharekhan Research Desk. I am Praveen Singh. We will be discussing the recent sell-off in commodities. We will also take a closer look at the various factors driving US yields, the dollar index and their impact on market. First, let us address the sell-off in commodities. Recent market trends have seen a sharp decline in commodities prices. This downturn can be attributed to various factors. One significant factor contributing to this sell-off is a surge in US yields. US yields have been on the rise, driven by the hawkish stance of the US Federal Reserve. The Fed remains confident in the resilience of the US economy and is concerned about elevated inflation. It looks for more rate hikes. This surge in yields has caused the US dollar index to rally. Several factors are contributing to this rally, including yield differentials between the US and other key economies, difference in stances of key central banks, and challenges in the Chinese economy. Despite the steep rate hikes, key US economic data such as ISM manufacturing, job openings, and ISM services have surprised on the upside. Investors have been taken aback by the resilience of the US economy, which is resulting in a significant rise in long-term yields as compared to short-term yields. Furthermore, a substantial quantum of bond issuance in the US is adding pressure to the market. The US core PCE deflator reading for August stands at 3.9% year-on-year, which is nearly double the US Fed's target. The graph clearly shows the breakout above the 4.35% resistance level in the US 10-year yields. The bear steepening trend in US Treasuries has narrowed the difference between the US 2-year yields and the US 10-year yields by 70 basis points since July. It is a kind of disinversion of the US yield curve. The US dollar index has seen a remarkable increase of over 7% since mid-July. Now, let us take a look at the outlook for bullion investments. With US 10-year yields potentially rising to 5% or even higher in the short term, the demand for zero-yielding assets may decrease further. Safe haven flows remain virtually absent. Gold, often considered a safe haven asset, could decline to $17.75 in the near term, and silver may drop to $20. Investors are advised to stay short until prices move above $18.85 for gold and $22.25 for silver. However, it is important to consider the risks to this bearish view. These risks include Fed potentially turning less hawkish due to softening of inflation or disappointing major US economic data. Additionally, the high yields in the market could lead to a credit event, which may force the US Federal Reserve to change its hawkish stance. In addition, Chinese economy might gather pace unexpectedly. So, in conclusion, the surge in US yields and firming above the US dollar index have significant implications for the markets. Investors should remain vigilant and consider the potential risks associated with their investments. So, that is all for today. Thank you for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.